Well, I think if we look at the macroeconomic environment, the inflation is and currency devaluation is the #1 issue, and I will give you an interesting statistic. Do you know that Zillow thinks that my house is 305 times more valuable than it was in 1930? So a lot of times if you go look at Bureau of Labor Trade statistics, they'll tell you that the dollar's lost 95% of its value over the last 8 years, but that's actually not true. The dollar's lost 99.7% of its value if your benchmark was Miami Beach real estate. MicroStrategy CEO and Bitcoin bull Michael Saylor sat down for a 35-minute interview with Risk Reversal Media to discuss Bitcoin in relation to the Ukraine-Russia conflict, its bullish outlook due to President Biden's recent comments, and of course inflation. But one of Saylor's most interesting talking points was where he believes Bitcoin is in the maturation cycle as an asset. It's no secret that Saylor made a small fortune during the 2010s as an individual investor, picking Facebook, Google and Apple stocks, holding throughout the turbulent times and cashing out once they reached maturity. Saylor did so well with that strategy that he penned the book The Mobile Wave, explaining his thoughts and process. Saylor stated, in hindsight those companies seemed like the obvious winner, but at the time 95% of the people were skeptical about the stocks as long-term holders, which is eerily similar to what is currently going on in the crypto market. According to Saylor, the volatility and FUD surrounding Google, Facebook and Amazon are the same as the FUD and volatility of Bitcoin. Nonetheless, Saylor believes now is the perfect time to buy Bitcoin before it becomes a mature asset. And Saylor isn't just a pundit, he clearly puts his money where his mouth is. Just recently, MicroStrategy took out a $205 million loan to buy more Bitcoin, collateralized with about $820 million in Bitcoin, representing about 12% of MicroStrategy's overall cryptocurrency holdings. The move is unprecedented. Saylor's conviction on now being the best time to buy is in full effect. Listen to what he has to say, and so that's the investor attitude. I don't see there's no political conviction or any likelihood that we're going to stop the expansion of the money supply. I mean, no one's expecting that, no one's even talking about that. So that being the case, I think your real choice is just, do you want to be long property, which property? And of course my attitude would be you should be leveraged long property in an inflationary environment. You want to be short the dollar. By the way, you want to be short the dollar because it's like -15 real yield, but I read even more like to be short the peso, which is probably a -35 real yield. So you want to be short a weak fiat currency via debt, and then you want to be long a property, ideally a non-sovereign store of value. Or if you're going to hold property in a nation, hopefully you either own the country or you trust the country. You know how valuable is $1 billion of real estate in Moscow right now? Right to anybody in the Western European region, it seems to me that it's pretty obvious there's $100 trillion worth of monetary energy or wealth that would be better served to be sitting in a synthetic digital asset like Bitcoin than to be sitting in our real estate or gold or equities that are currency derivatives or other kinds of weak currencies. So you got 100x opportunity or addressable market from here under. Even without considering inflation, by the time we get there it'll probably be 200x. So I don't think we're too early. I think we're 1-2% into it. If you look at it weighted, if you look from a time point of view, if you're an institutional investor, the first 10 years of the crypto network, you probably have to just sit and stare and see if it's going to break. So it was engineered, January 3rd, 2009, but you had to wait until about 2020 before you were sure it was going to be hacked, banned, broken, copied. And so I think 10 years later it starts to become interesting. We're year 2 of institutional adoption, right? Year 1 maybe started with MicroStrategy bought $250 million at Bitcoin in August of 2020, and that runs about a year. Like we're 18 months into our journey here. So you're in the middle of year 2 of institutional adoption. There's 10 years of education, and in those 10 years what happens in at the end of year 1, while Elon Musk gets involved, and then all of a sudden there's 24 Bitcoin miners that are publicly traded vehicles. About now there's another dozen companies probably come public. So you're watching the institutionalization of the asset class. We're waiting for guidance from the FDIC. That the executive order from the White House last week was a massive milestone. Biden's election was a massive milestone, but the executive order was a double massive milestone because that directs expected 18 agencies to figure this out. That'll be 24 months by the end of the first Biden administration. I think we have easy of the regulatory clarity that you need to understand this. That means that from the year 2024 to the year 2028, 80% has been figured out, and by the year 2030 maybe 90% has been figured out, and at that point I think it's just kind of like a growth industry. I mean, it'll be a nice growth industry 2030, 2040. But right now we're in hyper-growth early stage. Lots of questions, lots of people don't understand it, but I love that part because I think this is the stage. It's like 2011 Google stock or 2011 Amazon or Apple or Facebook, just at the stage where it sits kind of unstoppable. It's necessary. A reasonable objective person would say Google, Amazon, Apple, Facebook, they were all useful and necessary in the year 2012, and yet only 95 of the people were under-allocated. And then those things worked for the next 8 to 10 years. And then by the year 2021, every 21-year-old Uber driver, if you asked him, would have said, oh yeah, I own Facebook stock or I own Amazon stock, or they're getting debates about whether Google's better than Apple, and it's not really it's not that high growth stage anymore. It's that maturing dominant monopoly stage where now you're just tied into the greater growth of the techno economy. To watch the full interview, check out the link in the description. What do you think of Saylor's thoughts here? Leave a comment. Thanks for watching, and we'll see you in the next video.